Hello? Assalamualaikum Datuk. What's going on?
Waalaikumsalam. Hey Nini. As usual, I would like to ask your opinions about which company to invest.
Oh, no problem. So this time, what company are you decided to invest?
Oh, I heard that Padini and Bonya are now top competitors, so I decided to invest either one of them. And I would like to ask you and your team to help me to make this decision. So, can you?
Sure, I will inform you later. Let's our teams do our job. See you there. Glad to see you, Datuk. So this is our teams. Let's take a seat.
Oh, I'm glad to see you too. Wow, that looks really great. Thank you.
Before that, Dato', I would like to inform that the financial analyst will calculate the 5 ratios. So, we calculate based on the latest financial report to find out which company is better performance. So, okay, teams, let's show our result.
Ladies and gentlemen, my name is TENGKU SYARAH. As the Financial Analysis 1, we introduce about the profitability ratio. So, profitability ratio is an overview of the financial performance and the basis for discovering why the companies is succeed or fail. So, in this profitability ratio, we look at the gross profit margin and the net profit margin before tax and after tax. First of all, we take a look on the gross profit margin. In 2018, the gross profit margin for Bonya is higher compared to Padini, which is 60.79% and 40.95% respectively. So it means that the firms in the Bonya are well in control the cost of its stock and the manufacturing of its product. But Padini also shows the good performance in the gross profit margin, although the percentage is slightly lower compared to Bonya. So next, we go to the net profit margin before tax. So for net profit margin before tax, the Padini shows the higher percentage compared to Bonya, which is 14.28% and 6.79% respectively. So it shows that Padini are well in managing their expense and have the ability to pay the tax. Also, in the net profit margin after tax, the Padini shows the higher percentage compared to Bonya, which is Padini gains 10.61% and the Bonya, which is 5.65%. As I mentioned earlier, in the gross profit margin, Bonya gains a higher percentage compared to Padini, but in the net profit margin before and after tax, Padini shows the higher percentage compared to Bonya. So, we can conclude that if the investor is really interested to invest, choose the outperform company, which is Padini Holdings Berhad, because their company is managed well in their business compared to Bonya in the profitability ratio. So that's all from me. Thank you.
Next, I will explain about the liquidity ratio. In calculating liquidity ratio, it helps the investor which company is liquid. For this ratio, we calculate 5 ratio, which is current ratio, quick ratio, inventory turnover ratio, account receivable turnover ratio, and account payable turnover ratio for both companies, which is Bonya and Padini. Firstly, let us look at current ratio, which helps us to know how much current asset does the company have as against current liabilities. For both companies, they show quite similar value, which is 2.92 times and 2.93 times respectively. In order to stay solvent, the value must at least 1. This means that both companies are liquid and have sufficient current asset to pay off its current liabilities. Secondly, quick ratio, or we call it as asset test ratio, that helps the board of directors to understand if the company has sufficient asset that can be converted to cash quickly and use the proceeds to pay off its current liabilities. Here, Bonya and Padini shows very minimal difference of values, which is 1.90 times for Bonya and 1.94 times for Padini. We can see that both of them can pay its short-term debt without selling inventory because the ratio is more than 1. Then, inventory turnover ratio that indicates a company's past ability to sell its goods. In this analysis, Padini got higher ratio than Bonia, which is 3.x6 times higher than 1.64 times. Bonia and Padini take 222.7 days and 94.64 days to clear the stock. This means that Bonia holds the inventory longer than Padini. Dear Board of Director, as for now, we can clearly see that Padini is outperformed compared to Bonia. Apart from that, for account receivable turnover ratio indicates a company's ability to collect its account receivable. Bonia got 5.29 times, while Padini got 30.12 times, which means that Padini has higher likelihood that the customers' debt are being paid quickly, with account receivable turnover days 12.12 days compared to Bonia. And lastly, the Board of Director account payable turnover ratio basically indicates how frequently the company makes payment towards its account payable. In here, we can see that Bonia is more efficient since it makes the payment less frequently, with the ratio 2.79 times rather than Padini 4.57 times. Dear Board of Director, overall, Padini has better current ratio, quick ratio, inventory turnover ratio, and account receivable turnover ratio than Bonia, while Bonia is more liquid in account payable turnover ratio. As a result, it has been proven here that Padini has higher liquidity and well performed than Bonia generally. That's all from me.
Assalamualaikum to Datuk Nurul and my team SYARAH, HANISAH and NINI. So my name is FAQIHAH. Today I would like to present about leverage ratio. So before that, Datuk, leverage ratio is one of the important parts that we can measure to see the performance of each company. So function of leverage ratio is to analyze the company ability to pay all the debts, all the loans using the asset that they have. So high ratio may have high debts compared to the asset that they have. So we can see leverage ratio can be included into two parts, which is debt ratio and interest cover ratio. Okay, next Dato and my teams. So we will go to the first part, which is debt ratio. So debt ratio will determines the ratio of the liability and the asset. So in other words, it's calculate the financial leverage. So if the liability has the high level than the assets, it means that it has the higher ratio. So when the high ratio, it will observe as the high risk. So let's compare with these two companies, which is Padini and Bonia. So Padini has 0.29 times, while Bonia have 0.31 times. So both is actually less than 1. So it means that the firm is actually concerns the total of the assets is higher than the liability. But in this case, we will choose the best among the best. So the best will go to the Padini because it has lower ratio than Bonia.
Is it high debt ratio, high risk?
Yes, Dato', the high debt ratio means that the firms may have lots of debt. So as an investor, we have to see the ability of the company to pay all the debts for the future. Okay, next, let's go to the second part, which is we see about the interest cover ratio. So interest cover ratio measure the extent to which the firm's EBIT can meet interest expense. So EBIT stands for earning before interest and tax. So it simply put that it is used to determine how easily a company to pay interest and its outstanding debt. Okay, so in general, the lower ratio will give more the firm burden by the debt expense. So now let's see these both two results, Bonia and Padini. So Bonia is recorded as 5.29 times, while Padini is 90.77 times. So it's really clear that Padini is higher than Bonia. So for your information, Dato', a high interest cover ratio means that a firm should be able to service its interest expense without any difficulties. So this shows that Padini have a stronger financial health compared to Bonia. So Dato and all my teams, so consider all of this under the leverage ratio shows that Padini is outperformed than Bonia. So that's all for me. Thank you.
Okay, hi. Assalamualaikum warahmatullahi wabarakatuh to our beloved board of directors today, Dato' Nurul, and to all my fellow friends. So our meeting purposes today is we want to determine and distinguish which company are the best decision for Dato' Nurul invest in the future, right? The Bonia Corporations and Padini Holdings. So first thing first, we need to answering the most important questions, which is which company are more able to use their asset to earn a lot of profits and income, and which company can manage their liabilities effectively in the current period or in the short term. So Dato' Nurul, in order to answering these questions, we can use the efficiency ratios, which in these particular ratios, it contains another 4 different kinds of ratios, which is the first one is earning per share, second one is return on capital employed, the third one is return on asset, and the lastly is return on equity. So we move to the first part, which is earning per share. Okay, Dato' Nurul, in general, earning per share is the portion of a company's profit allocated to each outstanding shares, and the value illustrates how much profit a company has generated. And we can see from this data that EPS of Bonia is 2.45 cents, while the Padini 27.08 cents, and it shows clearly says that Padini is more profitable because larger EPS, the more profitable of that company. The next one is return on capital employed, or ROCE. So basically, this ratio measures how efficiently a company can generate profits from its capital employed. And Dato' Nurul can see from this data of table, which is ROCE for Bonia is 4.59%, and the Padini is 36.64%. And it says strongly that Padini is more outperformed because it shows their company are more planned and arranged when utilize their capital employed to generate the income and profit. Next, we move to the third part, which is return on asset, or we can call it as ROA. So, for Dato' Nurul informations, this part of ratios is the most important part because it gives the investor as an idea of how effectively the company is converting the money they invest into the net income. And we can see that the ROA for Bonia is 3.67%, while the Padini is 19.28%. And again, it says clearly that Padini are more well performed than Bonia because the higher ROA, the better, because the company earnings more money with less of investment. And lastly, we move to the last part, which is return on equity, or we can call it as ROE. Alright, so in general, ROE is a measurement of how effectively management is using a company's asset to create a profit and earnings. And from this table of data, we can see that ROA of Bonia is 5.34%, while Padini is 27.28%. And as a conclusion, it says that Padini has the bright future estimates of stocks growth rate and the growth rate of its dividends. So Dato' Nurul, as my conclusion and as my recommendation, I highly recommend you to invest on the Padini holdings because based on 4 kinds of ratios, Padini are more outperformed than Bonia Corporation. So I think that's all from me. Thank you. Assalamualaikum. Okay, let's move to the last part, which is the market ratios. So generally, market ratios are used to evaluate the current share price of a publicly held company's stock, and it is also used to determine whether a company's shares are overpriced or underpriced. So let's look the table of data for the Bonia and Padini holdings for the market ratios. So basically, as we can see here, Padini is selling for 22.05 times of its earning, while the Bonia company is sell for 68.57 times of their earnings. This shows that Bonia higher PE ratio than Padini holdings, where it shows the Bonia company is the company with the prospect because the gross stock are greater than Padini. But we need to remind that even though only these kind of ratios are led by the Bonia's company, but it does not mean that Bonia is our best choice for the future investment, because the majority of others ratios are led and owned by the Padini holdings. Therefore, to conclude our meetings today, our team has decided that the Padini holdings are the best future for the future investment. So I think that's all from me. Assalamualaikum. Thank you and Assalamualaikum.
So that's all from us. So Datuk, do you have already the decision which company to invest?
Yes, of course, I already made my decision. It's really clear, guys. Thank you so much for very good explanation to me. So my decision is I would like to invest to Padini company, which is better performance than Bonia. Thank you again to all of you.